Oops, hello. Yeah, there we go. The technical problems persist. Okay, everybody. We're going to be doing another Q&A video here. I'd like to apologize if I'm not my usual energetic self. I've actually got the beginnings of a pretty intense migraine here. So, again, if I don't sound like my normal self, that's the reason why. We've got a ton of questions here. Donna has forwarded over a bunch of some of the back issues, if you will, so let's just dive right in. Okay, first up is, Mac, what do you think of the Forex.com site and eSignal? I already have an account there, however, it's not one of your recommendations. Forex.com is perfectly okay. As far as the reviews that I've seen, again, I don't recommend brokers directly, just because if they go out of business, they're out of business. The reason why I didn't talk about Forex.com wasn't necessarily because of any integrity issues. It was more because they don't specifically allow micro lot trading, or at least they didn't at the time that I am recording this video and the kit. Next question is, the cover-up that will be revealed at the summit a trading system like the insider code, or is it a one-time event? I'm going to be doing a teleconference call here probably next week to talk about the seminar, what we're going to be doing, a little bit more background on it. But one thing for sure is that you're going to walk away with 4 key dates for the rest of the year that I think are going to play into a massive opportunity for profit. But then I'm also going to go over exactly how to capitalize on these things. And I'll also explain a little bit better what I mean by retire. So you're going to get a ton of information at the event. It's going to be far more than just 4 dates and then we're all going to go home. All right, so just keep that in mind. Next question. I was just watching the Q&A for today. You say that you do not use the 15-minute chart to trade. Now, I didn't say that exactly. What I said was, you know what? Maybe I did. What I meant was, let me put it that way, I don't use the 15-minute chart to just stare at it. Okay, you can see here on your screen is the hourly bar. I'll use the hourly bar to monitor the market, and if I am going to watch the market, then I'll use the hourly bars. The reason why I don't like to sit and watch the 15-minute bar is it's very easy to get caught up in what's going on at the moment. For example, when the market's moving down here, and I see it's closing on the low, and then it starts to push up a little bit, this doesn't give me a lot of information. In fact, at this point I was thinking, well, geez, the market looks like it's just retesting resistance and possibly moving down, or continuing to move down. But then when I went back to the 15-minute bar, let me get rid of this tunnel pattern, this was all going on right in this area here. Once this bar started to form up, what I saw was that the market was actually starting to push volume in as it was moving up. Okay, now I didn't notice this until after the hour was over, but again, the hour is what kept me from going in there and selling the market and getting caught in a little whipsaw here. So you can definitely see that the support was coming into the marketplace. This really wasn't the ideal setup here, although, well, we'll talk about this a little bit later. But the 15-minute bar I use specifically for an entry. So if I'm looking to enter, let's say I've decided based on the hourly bar that I want to trade. Let me go ahead and just line these up here. Okay. Whoops. Getting crazy. Okay, so the hour that shot down and then pushed back up is right here. Okay, so it's these few bars. So after those bars are over, look at what you can see by checking back with the 15-minute bar. Here's a volume spike, here's a volume spike, and look where both of those bars are. It's on the upside.